Most traders fail because they follow fake strategies. Today I'm trading a real strategy. Stay with me. Perhaps you'll never trade the same again. For those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. It's Coffee with Rob. I've been doing this for 34 years, and it all boils down to this. Fear and FOMO destroys traders. Ladies and gentlemen, fellow traders, welcome. It's good to have you and the video again. Let's talk about these things that we need to know today with regards to fear and FOMO and the strategy that's going to make you the money. Let's talk about the strategies. Let's get on with it. Let's get going. Don't forget, guys, trading's risky. Most traders lose money. And if you don't like risky, don't like losing money, guess what? Don't trade. Whatever you do, don't trade. Rather become a doctor, become a dentist, or one of those wonderful fine things. I'm not really sure which one you want to do. Let me move my picture out of the way so we can go and talk about all these trades. We can go and have a look at all these trades today and see where we are. Now, this morning, you guys would have thought, Rob, you're nuts. You're calling the US dollar ZAR long? Absolutely, yes. Look at that big red candle bouncing out, starting to go to the upside, starting to break that trend resistance. But what you guys might have noticed is this massive, huge head and shoulders here. Head and shoulders, if that plays out, it's going down quite a long way. Thing is, fundamentally, how can the Rand get so much stronger? Now, it's not to say it can never happen. You never know. The whole point here is I look at the fundamentals, and at the moment, the South African government's having a good old Barney, we call it, a fight with Washington. And they're not getting along in the slightest. In fact, Washington is now planning to impose sanctions. I'm getting my words all twisted today. Impose sanctions on the government of South Africa with regards to their feelings on how the country's being run here, and their racist policies and all the rest of it. So now what we're sitting with is a situation of, will the Rand get stronger? Now, if I look at that head and shoulders, I would say, well, you know, if I was just looking at the chart, I'd be like, definitely that's going to get stronger, isn't it? It's gonna just go crashing down this way. But then when I look at the overall picture and I see that trend going there and I see that going up and I think about the fundamentals, the only thing that could cause this to go the other way is if the dollar was to weaken for some other phenomenal, strange, wonderful reason. So as we stand at the moment, I'm looking at the long trade, and I'm saying that if that breaks to the upside, gives us a closed green candle, we can take the long trade to the upside. For those who are cautious, you could wait for it to break the shoulder and break above that shoulder. That would be a fair way to look at it. But today I am going to talk about the one strategy that makes us money, that one strategy that you guys all need to trade. And you know, we trade the three ways, and we'll discuss that, and we'll go into detail about the way we trade and how we trade, because that's important. It's really important. Now, I'm doing this video with my little video on the side. It should be out of the way, so that's normally the case. I'm going to go through the training process, and we're going to go into detail on all of this. For those that are not here, they can always come back to it. It's important to understand. You have to have one strategy, and one strategy will make you the money, one business plan. Let's talk about why most traders fail. Most traders fail because they're stuck in the never-ending cycle of doom. That cycle of doom where they keep going from system to system to system because they believe the charts are going to make them money. Now, I've told you guys a million times, the charts don't make you money. The charts are not where the money is. The money's in the strategy, the money's in the business plan. If you were to go and start any business in the world, surely you would need a business plan. You wouldn't be going in and just saying, oh, I'm just going to go and click on this chart, and I'm just going to go and have a look at that candle, and I'm just going to go short there because it's a red candle, and see what happens next. You don't know how much capital you need. You don't know how much profit you're going to make. You don't know anything. You're just jumping into the trade and saying, well, I'm just going to start trading today because Joe Soap said that I can drive a Porsche if I start trading, and I can turn $1,000 into millions and millions of dollars. But that's not how it works. That's just not how it works. It cannot work like that. How can you take any amount of money and double it in 12 months? Name one place you can take your money to and double it, whether it's $1,000, $100,000, $1 million, $10 million. Where are you going to take it and literally double it this year? In other words, turn $1,000 into $2,000. in 12 months. Now, I don't know of any place you can actually do that, even in the stock market, by the way, but people tell you that you can get into the stock market and within 12 months, you'll be able to turn $1,000 into hundreds of thousands of dollars, which always interests me. It always interests me why they think that that can be done, and that is possible. Theoretically, can be done. Practically, fear and FOMO will kick you out, and it'll stop you from doing that. So you've got to look at the situation that you're in and say, if I can't take $1,000 and turn it into $2,000 or turn it into $100,000 in 12 months, what am I going to do? So what a lot of people do is they get involved in funded accounts, and funded accounts are available. I've even got links in the description with funded accounts in them for those who want to get $100,000 to trade with, or maybe practice trading with that $100,000, and then you get a cut of the profits and you put that in your bank. That's one way of doing it. Another way is there's a lot of guys out there that are maybe they got retrenched or they got a pension or something like that, and they want to start trading with that. Now, the one thing you have to understand with trading is that you are going to lose. There are going to be losses in your trading. So you don't just win with trading. You don't take this trade and say, well, that's green. I'm going to go long here because it's the US dollars that are. Rob said it's going to go long, so we're going to go and buy it. And then it doesn't work out because 50% of the time, you're going to lose your trades, perhaps even more than 50% of the time. You're going to lose your trades. And the only way around that is to have a proper strategy. Now, the system is easy, and I'll show you guys the system. I've showed you guys the system a million times, and that is we trade three ways. We trade with the trend, we trade in a range, and then we trade on breakout or counter trade, counter trend. So in other words, it counters this trend. Green candle comes out, goes to the upside, or it breaks out from a level and it moves away. In other words, green candles above the resistance start moving away. That's a breakout. It's breaking out, it breaks down. Red candles below the support, breaks down, it's breaking down. Doesn't always work out. And often people will tell you, other traders will tell you, that if you want to trade breakouts, then you should wait for the retest. In other words, wait for it to come back, retest, and then take the trade. I'm one of those traders who doesn't do that. I don't wait for the retest. I'm actually quite risque, and I like to, if I see the green candle close or the red candle close, I'm in, I'm taking the trade, and off we go. If it retests and it works out, that's great. If it retests and it fails, then it heads to my stop loss. Either way, I'm on a 50-50, and I'm looking at a situation where I'm managing my risk. So the most important part of your strategy is simply to manage your risk. This is where most traders go wrong. Most traders stop right here at the charts. The charts are where we're at. So we're on the charts, we look at the charts, and we put our little line in place, and we say, where are we going to put this line? And there's our line, there's our resistance, and we put our support in. Now we're trading price action. So we're all brilliant now. We're all trading price action. We've got the head and shoulders here. We're looking at that. We're looking at the bigger picture, and we're trading on the charts. This is where most traders go wrong. They stop right here, and they believe that the chart has to call the trade for them, and that the chart's going to give them a win rate, and that win rate is going to make them profitable. Now, the question about win rates and charts is this. If I win 10 trades in a row here with a win rate, but I only win $10 per trade, I've only won $100. And then the 10th, 11th trade, I lose $1,000 because I get all booked up in it, and I follow the trade down, and I dollar cost average, and I move my stop loss away, as all traders do. And then I find myself in a pickle, a rather big pickle to say the least, because now I'm $1,000 down. I'm only $100 up. In other words, I've lost $900 instead of making some money. But I got a win rate. I won 10 trades and I only lost one. So win rates don't make you money. Win rates are a fallacy, are something that people seem to dream about or think about, or people just have this thing that win rates will somehow make the money. If I win more trades than I lose, then surely I should win. But we haven't really worked out the strategy of how much we're losing. You've got to understand how much you're losing for that to work. So if I win more trades than I lose, and I know how much I'm losing, then yeah, that's great. That'll actually be fantastic. But if I don't know how much I'm losing, how can I possibly win? Because I could be losing gargantuan sums of money and winning tiny little sums on the wins, which is not really much good, is it? It is coffee with Rob, so. So let's take this into perspective, and let's talk about this, because so many people don't get this. So many people don't understand this. And the important part is to understand that charts don't make you money. When I started trading, we used to draw charts with pens and pencils. Charts were not nice little computer things like this. How lovely is it to have these computer programs now where I can draw these fancy purple blocks, and I can draw these lines in, and I can draw resistance areas and support in with the click of a button, and it's all there for you on any trading software, whether it be this MT5, whether it be TradingView or CTrader or whatever trading program that you have. It honestly doesn't matter. Doesn't matter one way or the other. You get amazing trading tools that you can use. You get all sucked into the indicators. Number one, everybody wants to trade with indicators. Say there's a million indicators, for example, on TradingView. I think there's a million indicators here as well. If I was to look for indicators, I would find millions of indicators, which you don't need to use. The only indicator that's really important to most pros is RSI, Relative Strength Index. And I know that everybody wants to use all these other indicators, all the moving averages, all the Ichimokus, all the MACDs, and you name it, but not necessary. And then another important indicator that some people might like to use is the volume. People like to use the volume as well. You look at this trade, it's coming down. This is a supply and demand, so it's hit that area. There's a support here. It's broken through the support. Nasty candle pointing it back up. Go and download a little bit about candles. Candles can help you with direction. Candles can show you which direction things are going in sometimes. Just remember that candles are only valid for the next time period. Now, we trade on the 4 hour and we swing trade or we position trade. They call it swing trading now. I call it position trading. It's much slower, much easier to trade with, and you don't have to get all hooked up into it. You don't have to sit and watch charts all day. You can relax, pop down the beach. You can come in the morning, take your trades, leave them, come back later. It's much easier to trade, and you can make them wider, but you do have to be patient. And patience is a big issue for traders as well. Traders don't have patience. So that's why they drop to the 5-minute charts, because they get bored and then they start trading on faster trading and then they lose all their money. You have to have patience. You have to learn to sit on your hands and wait for the trades to come to you. Then you have to leave the trades in place. Now, the nice thing about what you call swing trading and I call position trading is you can take your position, leave it, and come back to it later. Let's say you take this US dollar ZAR. There we have it. We've got a range. We've got the upper range. We've got the lower range. We know that it's broken through that trend resistance, giving us a green candle. That green candle closes. We take the trade. We target 1750. We put a stop loss at 1690. There you go. Bob's your uncle. That's how easy it is to take a trade. But now you have to manage that trade and you have to manage the strategy. The strategy is simple. And I give you the strategy in all the videos. And I'm going to give you the strategy simple here. Three-point business plan. It's not like 1,000 pages or anything. Business plan. Who would start a business without a business plan or a plan of some sort? So you get in and you say, I'm going to risk the same amount on every single trade. Now, why do we risk the same amount on every single trade? Because then you know exactly how much you're risking. And now you can plan to make more on your wins and lose less on your losses, because that's the plan. The plan is to lose less on your losses and make more on your wins. So if you have a $100,000 account, then simply you're risking $1,000 per trade, no matter what. How do you do that? Basically, you go into the trade, say, I want to put my stop loss down here at 1690. How many contracts can I take back up to 1715? And you work that out. Say, now it's 0.05. You take that, and then you work out how much profit you can make. 1750. Is it more than the $1,000 I'm risking? Is it 2,000? Is it 1,500? That's good enough. And then you take the trade based on that. Then you simply manage the trade from there. Come back to it, check where it is it in profit, move your stop loss up into cost, the trade's costing you nothing. Understand this, every single time you take a trade, every single time you decide to take a trade, it's costing you the risk that you're putting in. In other words, if you're risking $1,000 per trade, every single trade you take costs $1,000. Until such time as you decide that it's not, and then you put the stop loss up to cost, then it's costing you nothing. Now suddenly it's a free trade. You can actually look at that as $1,000 win, because you actually should be writing that $1,000 off as soon as you take the trade, knowing that you're trying to make a profit, you might get it back. What most traders make the mistake of doing is thinking, I'm going to make the profit first, not understanding that I've actually put risk on the table. You've actually put money on the table. You've put risk down. And that risk is now out there. You could lose it. So understand that that's how much the trade is costing you if it all goes pear-shaped. That's as simple as the strategy gets. There's no complicated issues around the strategy. It's incredibly simple. Keep it simple. Just keep it simple. and it'll be so much easier. And then you just trade with our simple price action system, which is resistance, support. So we've got our support areas that we put in place. We've got our resistance areas that we put in place. We've got our trends. And I've shown you guys this so many times. Once you know where your resistance is, once you know where your support is, it becomes so much easier to take your trades, because you look at this trade, it's on support. You look at the trade, there's the resistance. The resistance is clearly pretty far away. You've got this trend, you put the trend in, and it's breaking through the trend. So it's breaking structure on the trend. It's bouncing off the support. It's so simple. I mean, you don't have to get complicated with these trades.
I'm just having a bit of a hard time visualizing it.
You don't have to go over the top with these trades. That is my rant on the one strategy that you need to trade with. You don't need 500 different systems to trade with. You don't need to get caught up in that cycle of doom, watching millions of YouTube videos, going on hundreds of courses, looking for that magic pull. You know what? I don't have a magic pull in my pocket. No trader does. You know, the magic's not going to fall out the sky. You're not going to make millions of dollars out of nothing. Every time a system fails, there isn't a better one waiting for you around the corner. In fact, the more you take off your charts and the more simple you make it and the more you apply strategy to it, the more you'll start understanding the whole point. You see, the thing is, the aha moment came to me many years ago when many older traders turned around to me and said, Rob, you can't time the market. You can only make money with time in the market. And my reply to them was always, but I want to make money now. I need to make money now. I can't wait 30 years for it, which we are doing now. I mean, we've got the investment account, all disclosures there, you know, that is on the go. You know, at the time, I was only looking to trade and I was hoping to make the money today, this week, this month, not next year or 5 years time or whatever. You want to have the fun now, not when you're old. So the whole point was, but you can't time the market. You can only have time in the market. If you try and time the market, you're going to lose. And then I realized that I had to find a system that was going to allow me to work in a market that cannot be timed. In a market that you cannot time, that you cannot decide, okay, it's going to definitely go up now or it's going to definitely go down. A market that's 50-50. How do you apply a strategy to that? How can you make money with that? And it all dawned on me, having time in the market is the same as working on a strategy that basically says make more on the winning trades, lose less on the losing trades. And you can take as many trades as you want, because odds on, that's what it's going to do. Pretty straightforward. We trade with a trend, trade in the range, and we trade breakout trades. Simple as it gets. We wait for the candles to close. We go for it. I don't wait for break and retests. We just hit it and we just go. We just nail the trades. That's as easy as it gets. There's only one real day trading strategy. There's only one real day trading strategy or swing trading strategy or position trading strategy that you need, and that is risk management. There is no other amazing strategy. Hope that helps you guys. If there's any questions, do ask. If you're serious about becoming a seasoned good trader, then subscribe now. Don't forget to like this video. And on that note, I'm actually going to have to be on my way now. I want to thank you all for being here. Don't forget, for those of you who are not members yet, it supports the channel and buys me coffee and that sort of thing. So go and do that as well. You get trade of the day every day and a few other nice little perks. Thanks for being here, guys. On that note, I want you guys to make lots and lots of money and enjoy the rest of your day. And I'll see you back here on Thursday. And for those members, every morning. Thanks for watching. Till the next one. Cheers. Ciao. And arrivederci. Bye.